Before you place your next trade, you need to hear this. You stare at the screen. The numbers dance. Your heart pounds. You know exactly what your trading plan says. You've studied the charts for hours. You understand risk management better than most traders ever will. Yet somehow, when the market opens, everything falls apart. Your finger hovers over the buy button. Logic screams one thing. Your gut whispers another. And in that split second, you choose the whisper. Every trader wants control, but control is what destroys them. You felt that panic. The chart moves, and your brain whispers, do something, anything. Just don't sit there watching opportunity slip away. Today, you'll finally understand why your brain trades against you, why the smartest traders often make the dumbest mistakes, and why knowing what to do means nothing if you can't control what you feel. Picture this. You wake up Monday morning with a perfect plan. You've analysed the markets, you've set your stops, you've calculated your position sizes down to the penny. You feel confident, prepared, ready to execute with precision. Then the market opens and within minutes everything changes. A stock you've been watching gaps up 5%. Your carefully planned entry point is now miles away. Fear of missing out creeps in like smoke under a door. You tell yourself to wait for a pullback. Your plan says be patient, but the stock keeps climbing. 2%, 3%, 4%. Each tick higher feels like money stolen from your pocket. Other traders are getting rich while you sit on the sidelines like a fool. The voice in your head grows louder. What if this is the big one? What if this runs all day? What if you never get another chance like this? You're not broken. Your brain is just wired for survival. For thousands of years, hesitation meant death. Miss the hunt, starve. Miss the danger, die. Your ancestors who acted fast lived long enough to pass on their genes. Your ancestors who overthought everything became extinct. Now you're trying to use that same ancient brain to trade modern markets. It's like bringing a stone axe to a gunfight. The irony cuts deep. The more you know about trading, the more your emotions betray you. Beginners sometimes stumble into profits through sheer ignorance. They don't know enough to be afraid. But once you understand what can go wrong, once you've felt real losses burn through your account, knowledge becomes a double-edged sword. You know the risks so well they paralyze you. You know the opportunities so well they torment you. Sarah learned this the hard way. She spent 6 months studying technical analysis. She could spot support and resistance levels better than traders with decades of experience. She understood position sizing, risk-reward ratios, and money management principles that most people never discover. Her demo account performance was flawless. Consistent profits month after month. She felt ready for live trading. Her first real trade was a textbook setup. Perfect entry, logical stop loss, clear profit target. Everything aligned exactly as her education had taught her. But when she clicked the buy button with real money, something changed. The position moved against her by just 50 cents, well within normal market noise. Her stop loss wasn't even close to being triggered. Yet panic flooded her system like ice water in her veins. Her hands started shaking, her heart raced. Sweat beaded on her forehead despite the cool room temperature. The logical part of her brain knew this was normal price action. The emotional part screamed that disaster was coming. She closed the trade for a tiny loss, abandoning her carefully crafted plan. Minutes later, the stock reversed and hit her original profit target perfectly. This pattern repeated for weeks. Great analysis, perfect setups, logical plans. Then emotion would hijack her execution every single time. She'd exit winners too early, hold losers too long, or avoid trades altogether when fear overwhelmed her system. The knowledge was there, the skills were there. But something invisible kept sabotaging her success. So how do you trade when your instincts want to destroy you? How do you overcome millions of years of evolution that trained your brain to act first and think later? The answer isn't what most traders expect. It's not about becoming fearless. It's not about suppressing emotions or pretending they don't exist. It's about understanding the hidden war happening inside your skull every time you face the market. Most trading education focuses on the external game: chart patterns, indicators, fundamental analysis, market structure. These are important tools, but they miss the most critical component: the internal game, the psychological battlefield where your real edge gets built or destroyed. Every click of your mouse, every decision to hold or fold, every moment of hesitation or action gets filtered through an emotional system that doesn't understand modern markets. Your brain operates on ancient software running in a modern world. When you see a stock price dropping, your amygdala, the brain's alarm system, can't distinguish between a paper loss and a physical threat. It triggers the same fight or flight response your ancestors used to escape predators. Adrenaline floods your system. Your heart rate spikes. Your thinking narrows to pure survival mode. In this state, complex analysis becomes impossible. Risk management feels like weakness. Long-term thinking disappears entirely. Your brain wants immediate action to escape the perceived danger. This is why traders who are brilliant analysts in calm moments make terrible decisions under pressure. The hardware hasn't changed, only the software environment is different. Take a breath, because what comes next might change how you see the market forever. The most successful traders aren't the ones who feel no emotion. They're the ones who learn to recognize their emotional patterns and work with them instead of against them. They understand that every trade triggers a predictable sequence of psychological responses: fear before entry, greed during profits, panic during losses, regret after exits. These emotions aren't bugs in the system, they're features, hardwired survival mechanisms that kept your ancestors alive. But here's where it gets interesting. The same brain that can sabotage your trading can also become your greatest asset. When you understand how your emotions flow, when you can predict your own psychological reactions, you gain a superpower that most traders never develop. You stop fighting yourself and start working with yourself. The key lies in recognition. The moment you notice the emotional impulse rising, the moment you catch yourself leaning forward in your chair or feeling your pulse quicken, you've created a gap, a space between stimulus and response. In that gap lives your power to choose, not to suppress the emotion, but to acknowledge it and decide consciously how to respond. Professional traders develop what psychologists call metacognition, the ability to think about thinking. They become observers of their own mental processes. When fear arises, they notice it without judgment. When greed whispers seductive promises, they hear it without being controlled by it. This isn't about becoming emotionless. It's about becoming emotionally intelligent. The market doesn't care about your feelings, but your feelings determine everything about how you interact with the market. Your emotions influence when you enter trades, how long you hold them, when you exit, how much you risk, and whether you learn from your mistakes or repeat them endlessly. Master your emotions, and you master your trading. Ignore them and they'll master you. Most traders approach emotions like they're the enemy. They try to eliminate fear, suppress greed, and bulldoze through uncertainty with sheer willpower. This approach fails because emotions aren't meant to be eliminated. They're meant to be understood, respected, and channeled constructively. Fear can keep you from taking stupid risks. Greed can motivate you to pursue genuine opportunities. Even frustration can signal when your approach needs adjustment. The question isn't whether you'll feel emotions while trading. You will. The question is whether those emotions will control your decisions or inform them, whether they'll sabotage your success or guide you toward it. The difference lies not in what you feel, but in how you respond to what you feel. This is where most trading education gets it backwards. It teaches you to analyze markets without teaching you to analyze yourself. It shows you how to read charts without showing you how to read your own emotional patterns. It gives you tools to predict price movements without tools to predict your own psychological reactions. You end up technically competent, but emotionally vulnerable. The hidden emotion behind every bad trade isn't fear or greed or panic. It's unconsciousness, the lack of awareness about what's happening inside your own mind. When you trade unconsciously, your ancient brain takes control. When you trade consciously, you can choose your response regardless of what you feel. Think of the most successful person you know, not the flashiest, not the loudest, the one who gets results quietly, consistently, without drama. What separates them from everyone else isn't intelligence or luck. It's something invisible, something most people never develop. They've learned to recognize the exact moment when their emotions try to hijack their decisions. They've trained themselves to pause in that space between feeling and action. This is what the most profitable traders understand that everyone else misses. Your emotions aren't random. They follow patterns as predictable as the sunrise. Fear shows up at specific moments. Greed whispers at particular price levels. Frustration builds in measurable stages. Once you map these patterns, once you see them coming before they arrive, everything changes. But here's what nobody tells you. The goal isn't to eliminate emotions. That's impossible and counterproductive. The goal is to develop what psychologists call emotional granularity. The ability to identify exactly which emotion you're experiencing and why it's showing up at that precise moment. Most people operate with emotional vocabulary limited to mad, sad, glad, or afraid. Professional traders develop a sophisticated emotional radar system. They distinguish between anticipatory anxiety and reactive fear, between opportunity excitement and reckless greed, between productive frustration and destructive anger. This precision matters because different emotions require different responses. Anticipatory anxiety might signal you need better preparation. Reactive fear might indicate position size is too large. Opportunity excitement could mean you found a genuine setup. Reckless greed warns you're about to overtrade. When you can name the emotion accurately, you can respond appropriately instead of being controlled by it. The market operates like a massive psychological stress test. It finds your emotional weak points and hammers them relentlessly until you either break or adapt. Every price movement is designed to trigger some primal response. Every pause tests your patience. Every rally tempts your greed. Every decline provokes your fear. Most traders fight this reality. They try to build walls against emotion or pretend they can think their way past feeling. This approach fails because emotions aren't the enemy. They're information, valuable data about what's happening inside your decision-making system. Fear tells you something important. Maybe your position size exceeds your comfort zone. Maybe you lack sufficient analysis. Maybe market conditions don't match your strategy. When you listen to fear without being controlled by it, it guides you toward better decisions. Greed also carries messages. Maybe you've identified a genuine opportunity. Maybe you're seeing patterns others miss. Maybe your confidence reflects developing skill. But greed can also signal overconfidence, impatience, or dangerous thinking patterns. The difference between helpful emotion and destructive emotion isn't the feeling itself, it's your relationship with the feeling. Conscious traders use emotions as advisors, not dictators. Look closer at how professional traders actually think. They don't suppress their emotional responses. They study them. They keep detailed journals tracking not just what they traded, but what they felt before, during, and after each trade. They identify their personal emotional triggers and develop specific protocols for handling each one. When Mark feels the familiar tightness in his chest that signals revenge trading impulses, he has a predetermined response. Step away from the screen, take 10 deep breaths, review his trading plan, calculate exact position size based on current account balance. Only then consider entering any trade. When Lisa notices her pulse quickening as a stock approaches her target, she recognizes opportunity excitement mixed with exit anxiety. Her protocol involves setting a trailing stop, reviewing her original thesis, and deciding whether to scale out partially or hold for full target. These aren't random coping strategies. They're carefully developed emotional management systems built through years of observation and refinement. The most dangerous emotion isn't fear or greed. It's unconscious confidence, the feeling that you've figured it out, that your recent wins prove you've mastered the market, that rules apply to other people but not to you. This emotion creeps in silently after successful periods. It whispers that position sizes can increase, that stop losses aren't necessary, that gut feelings matter more than analysis. Unconscious confidence has destroyed more trading accounts than any market crash. Professional traders develop specific defenses against this silent killer. They maintain rigid position sizing rules regardless of recent performance. They review their worst trades monthly to stay humble. They treat every setup with the same analytical rigor whether they're on a winning streak or losing streak. They understand that the market rewards consistency, not confidence, that discipline matters more than intelligence, that survival trumps brilliance every time. Reflect on your last 10 trades, not the technical analysis, not the profit and loss, the emotions. What did you feel before entering each position? What thoughts crossed your mind as prices moved? How did you decide when to exit? Most traders can't answer these questions because they trade unconsciously. They focus entirely on external market action while ignoring internal mental action. This is like trying to drive while blindfolded. You might survive for a while, but eventually you'll crash. The traders who compound small accounts into large ones share a common trait. They've developed extraordinary self-awareness. They know their emotional patterns better than they know chart patterns. They can predict their own psychological reactions more accurately than they predict price movements. This self-knowledge becomes their ultimate edge. When they recognize familiar emotional signatures, they can adjust their approach before emotions derail their execution. They become their own early warning system. The path from emotional trading to conscious trading isn't comfortable. It requires confronting parts of yourself you'd rather ignore, acknowledging fears you've tried to suppress, admitting mistakes you've rationalized away, accepting limitations you've denied. But this discomfort is temporary. The clarity that emerges from honest self-examination lasts forever. Once you understand your emotional operating system, you can upgrade it. Once you map your psychological patterns, you can modify them. Think about how athletes develop muscle memory through repetition. Conscious traders develop emotional memory the same way. They practice recognizing emotional states. They rehearse appropriate responses. They strengthen their psychological reflexes until good decision-making becomes automatic. This isn't about becoming a robot. It's about becoming a more sophisticated human, someone who can feel deeply while thinking clearly, someone who can acknowledge emotion while choosing action, someone who can stay calm in chaos because they understand the chaos isn't personal. The market doesn't know you exist. It doesn't care about your bills, your dreams, your fears, or your hopes. This impersonality feels harsh at first, but it's actually liberating. If the market isn't personal, then losses aren't personal attacks, wins aren't personal validation, price movements aren't judgments about your worth. This perspective shift changes everything. When trading stops being about proving yourself and starts being about executing a process, emotions naturally calm down. When results stop defining your identity and start being data points in a larger system, pressure decreases dramatically. The most profound trading breakthrough isn't technical, it's psychological. The moment you realize you don't need the market to make you feel good, the moment you stop seeking emotional satisfaction from trading and start seeking consistent execution. This internal shift often happens gradually, then suddenly, like water slowly heating until it reaches boiling point. One day you notice you're watching price movements without attachment, entering trades without anxiety, exiting positions without regret, managing risk without fear. You're still human. You still feel emotions. But now emotions inform your decisions instead of controlling them. Now you're trading with your whole mind instead of just the primitive parts. The journey from emotional reactivity to conscious response is different for every trader. Some need months of careful observation and journaling. Others require years of trial and error. A few experience sudden insights that accelerate the process dramatically. But everyone who makes this transition follows a similar pattern. First comes awareness of emotional patterns. Then comes understanding of what triggers those patterns. Finally comes development of better responses to those triggers. This progression isn't linear. You'll have setbacks, moments when old emotional patterns resurface, trades where you react instead of respond, days when consciousness lapses back into unconsciousness. These setbacks aren't failures. They're part of the process. Each one teaches you something new about your psychological makeup. Each one strengthens your ability to recognize and correct emotional hijacking more quickly next time. The goal isn't perfection. Perfect emotional control is impossible and unnecessary. The goal is improvement, becoming slightly more aware each month, developing marginally better responses each quarter, building incrementally stronger psychological resilience each year. Small improvements compound into dramatic transformations over time. The trader who cuts one bad trade per month becomes dramatically more profitable within a year. The trader who extends average holding time by 10% can double returns over time. The trader who reduces position size during emotional stress protects capital during inevitable drawdown periods. These micro-adjustments feel insignificant in the moment, but they create massive differences in long-term results. This is why conscious trading isn't about dramatic personality changes. It's about subtle behavioral modifications that compound into profound performance improvements. Your emotions will never disappear. Market stress will always trigger psychological responses. The difference between successful and unsuccessful traders isn't the absence of emotion. It's the presence of choice in how to respond to emotion. When you develop this choice, when you create that crucial gap between stimulus and response, you join a small group of traders who understand something most never learn. That the real market isn't made of candlesticks and volume bars, it's made of human psychology. And the trader who masters their own psychology gains an edge that no technical analysis can provide. Your trading account sits at 0 again, the 5th time this year. You close your laptop and stare at the wall, wondering how someone who understands technical analysis better than most professionals keeps making the same devastating mistakes. The charts made perfect sense. Your analysis was flawless. Your entry timing was precise. But somewhere between knowing what to do and actually doing it, everything fell apart. This isn't about lacking knowledge. This is about something far more dangerous. Something hiding beneath every click, every hesitation, every moment when you choose the wrong path despite knowing the right one. Today you'll discover the invisible force that turns brilliant traders into their own worst enemies. Most traders think success comes from reading charts better, from finding the perfect indicator, from discovering some secret pattern the market hasn't figured out yet. They spend thousands of hours studying price action and 0 minutes studying the person making the decisions. They analyze every market movement except the one that matters most, the movement happening inside their own mind. Your brain wasn't designed for trading. It was designed to keep your ancestors alive in a world where hesitation meant death and overconfidence meant starvation. Every decision-making system in your head evolved for immediate physical survival, not delayed financial gain. When you sit in front of those glowing screens, when you watch those numbers dance, when you feel your pulse quicken as profits turn to losses, you're not just trading the market. You're fighting evolution itself. The most dangerous moment in any trader's journey isn't the first big loss. It's the moment they realize their emotions are sabotaging every good decision they try to make. That realization hits like ice water. Suddenly you see it everywhere. The fear that makes you exit winners too early, the greed that makes you hold losers too long, the panic that makes you overtrade after losses, the overconfidence that makes you ignore risk management after wins. You start to feel like a prisoner inside your own mind, watching yourself make mistakes you swore you'd never repeat. Michael discovered this the hard way. 3 years of studying markets, 2 years of profitable demo trading, 6 months of live trading that started well, but slowly deteriorated into chaos. He could explain why every trade failed. He could identify exactly where his analysis went wrong, but he couldn't stop making the same emotional errors over and over. His journal entries told the story. Perfect technical setups followed by impulsive exits. Logical entry points abandoned because fear whispered maybe this time is different. Stop losses moved further away because he couldn't bear to admit being wrong. Position sizes doubled after losses because he needed to get even faster. The technical knowledge was solid. The emotional execution was completely broken. One morning, Michael placed a trade that followed every rule in his system. Perfect risk-reward ratio, clear stop-loss, reasonable position size. Everything aligned exactly as his months of backtesting had shown. The trade immediately moved in his favor. $50 profit became $100. $100 became $200. His original target was $300. But as profits mounted, something shifted. What if this was the big one? What if he'd finally found his breakthrough trade? What if he could make 1,000 instead of 300? The logical part of his brain knew this thinking was dangerous. The emotional part was already calculating how much debt he could pay off with a really big win. He moved his target higher, then higher again. The voice in his head grew louder. You've been playing it too safe. This is your chance to really make money. Don't be weak. Let it run. The trade peaked at $800 profit before reversing. He watched it fall to $600, then $400, telling himself it was just a pullback. At $200, he started to panic. At break-even, he finally closed it. 0 profit from a perfect setup because emotions hijacked his execution at the crucial moment. The pattern repeated for weeks. Great analysis, terrible execution, solid plans, emotional sabotage. He felt like he was living in a psychological prison where the warden was his own mind. Look closer at what's really happening when emotions take control. Your prefrontal cortex, the part of your brain responsible for planning and rational decision-making, literally goes offline under stress. Blood flow shifts to more primitive areas designed for immediate survival responses. Your ability to think long-term disappears. Your capacity for complex analysis evaporates. You become a different person making decisions with different priorities. This isn't weakness. This is biology. When your amygdala detects potential danger, Like watching profits disappear or losses mount, it triggers a cascade of neurochemical changes designed to keep you alive. Adrenaline floods your system, cortisol spikes your stress levels, dopamine creates craving for immediate relief. Your entire nervous system shifts into fight or flight mode. In this altered state, holding a losing trade feels like standing in front of an oncoming train. Taking profits feels like escaping immediate danger. Adding to positions feels like fighting back against an attacker. These aren't rational responses to financial data. These are survival responses to perceived life threats. Your ancient brain can't distinguish between a saber-toothed tiger and a red candle on your screen. The traders who survive and eventually thrive don't overcome these biological responses. They learn to work with them. They develop what psychologists call emotional regulation. Not the suppression of feeling, but the conscious management of how feelings influence actions. They create space between stimulus and response, between feeling and doing, between impulse and choice. This space is where your trading edge actually lives. Professional traders develop a different relationship with their emotions entirely. Instead of fighting fear, they listen to what it's trying to tell them. Fear might signal that position size is too large, that market conditions don't match their strategy, that they're trading outside their comfort zone. When they pay attention to fear without being controlled by it, it guides them toward better decisions. The same applies to greed. Instead of trying to eliminate the desire for larger profits, they study when greed appears and what triggers it. They notice that greed often emerges after a series of small wins, that it whispers loudest right before major reversals, that it grows stronger when they're behind on monthly targets. This awareness transforms greed from a destructive force into valuable market intelligence. Even anger and frustration carry important messages. Anger often signals that they're fighting the market instead of flowing with it. Frustration might indicate they're forcing trades that don't meet their criteria. These emotions become part of their feedback system rather than obstacles to overcome. The shift from fighting emotions to partnering with them changes everything. Think about the last time you made a truly great trading decision. Not just profitable, but perfectly executed from start to finish. You probably felt calm, focused, almost detached from the outcome. Your analysis was clear. Your execution was smooth. Your exit felt natural. You were trading from what athletes call the zone, that state of relaxed concentration where everything flows effortlessly. This zone state isn't accidental. It emerges when your analytical mind and emotional system are working together instead of against each other. When fear informs without paralyzing. When confidence motivates without blinding. When patience allows opportunities to develop naturally. This integration of thinking and feeling is what separates consistently profitable traders from everyone else. But here's what most traders miss. You can't think your way into the zone. You can't force emotional integration through willpower alone. It requires a fundamental shift in how you relate to your own psychological processes. Instead of trying to control your emotions, you learn to observe them. Instead of judging your feelings as good or bad, you study them as data. Instead of fighting your reactions, you become curious about what triggers them. This observer perspective creates psychological distance from your immediate emotional experience. You're no longer trapped inside the emotion. You're watching it from a slight remove, like a scientist studying an interesting phenomenon. This distance doesn't eliminate the feeling, but it prevents the feeling from eliminating your judgment. You came here looking for control. Instead, you found something far more powerful: understanding. The market will always be unpredictable, but your response to it doesn't have to be. Every emotion you feel while trading is information, not instruction. Every impulse is data, not destiny. The gap between stimulus and response is where your true edge lives. Master that space, and you master everything that matters. Your next trade begins with this choice. Will you react from ancient programming or respond from conscious awareness? The market is waiting, but now so are you.